Top 10 stock market terminologies for beginners, because if you're a pro, you might not really need to. Even a pro might also, you might not really know what this thing means. So in this video, we are going to look at the top 10 terminologies. You have to know that the terminologies are so many, just like in every field, but you have to consider them maybe in subsequent video, but you have to just tell you the ones that are beginner friendly so that you kickstart with them. Why is it important? A bit of background. It is very important for you to at least familiarize yourself with the terminologies. If you're a doctor, you have to familiarize yourself with the medical terms. The same thing applicable if you're an investor in financial market. You have to familiarize yourself. You have to speak the language of financial market investors. So the same thing applicable in stock market. There are some terms that once you hear it, once you are listening to your Bloomberg, these are the terms you'll be hearing, or even when you are accessing some financial data, those details are being represented in some of these terms. So this list is not an exhaustive list. It's just to give you a guide after which you can do further research. So let's kickstart. Number one is bull market. Yes, bull market is very, very popular. It simply means, let's read that and explain. It's the term used to describe a financial market in which prices are rising or expected to rise. So it's a general term when you hear, and it is being coined from the animal bull. When the bull wants to fight, you see, just go to Google and type bull, you see the bull, it raises its horn up. If the bull wants to fight. So when the market is going up, it's being described as a bull market because prices are making higher highs. So if you want to tell somebody that the market is going up, you can tell some person that the market is bullish. So a bull market, or you hear somebody say we are in a bullish market, that 2024 has been so bullish. So it means price is going up. So it comes with a lot of optimism. Then it has the opposite, which is number 2, bear market. A bear market is the opposite of bull market. It's a market and a market environment where price falls. There is a difference between bear market and a correction. When in subsequent video we teach you about that, there's what's different, that the market is correcting and the market has reversed. When the market reverses entirely, it becomes a bear market. So percentage wise, statistically, when the market or a popular index, let's say in Nigeria there is a index called All Share Index. It is the index that tracks all the stocks in Nigeria. Then in US there is an index that tracks the major 500 company, which is S&P 500. So when S&P 500 drops 20%, you see financial news saying that we are now in a bear market. So this is historically a matrix that can use this measure of 20%. So it's a metric that can be used to say that this market is in a bear, we are in a bear market. And it's also coined from the animal concept of the bear. If the bear wants to fight, it faces that. So that it fights its prey to the downside. So that's it. So it's the opposite of the bull market. This one comes with a lot of pessimism. So you are being pessimistic. In bear markets, investors are pessimistic. Then the third concept or the third terminology you have to familiarize yourself is broker. A broker is a firm which executes your buy or sell order for stocks or other securities. Remember, we are talking about stocks here. So that firm, the third party, that's why you cannot trade. You cannot be a trader or an investor in the stock market without having a brokerage account. It's practically impossible. So that brokerage account you are using, where you fund and buy your shares and track your shares, it is being powered by the service of a brokerage firm. So that brokerage firm is called a broker in this context. So if you don't know, depending on where you, especially for those in Nigeria, we have a video also on how to select the best broker. Check it you will see it somewhere in the channel here, or it might be linked below, above. So broker is the third party that links you to the market, and it takes your order and executes it for you, whether buy or sell. The next concept is market capitalization, which can also be known as market cap. You'll be hearing market cap, the market cap of Tesla, the market cap of MTN Nigeria, the market cap of First Bank, the market cap of Nvidia is this. Nvidia is the most capitalized market. Apple is the most capitalized stock in the market. So what it means is the total value of the company's share. So example, let's say a company has 1,000 shares or outstanding shares in the market. Then how to get a market cap is the total number of shares in the market times the market price. Let's say a company is trading at $20 and the total share the company $20 per share, and the total share the company has in the market is 1 million units of share. So you just do 1 million times $20, it will give you 20 million. That's the total value of that company, and that's what market cap is all about. And market cap is also found in every market, both in the crypto market. You see the market cap of the crypto. Even gold has its own market cap. So it's how to evaluate a company. So most of the time we have subcategories of companies. There's where you start having high cap markets, low cap markets, penny stocks, and all those kind of stuff. So this is where it's derived from. We'll talk about that more in the subsequent videos. The next concept is capital gain, which is what whenever you make an investment in shares and you buy at a lower price and sell at a higher price. Let's say you bought a share at $5 and you are selling at $10. That's, you have pocketed $5 profits. That $5 profit is called capital gain. We have the opposite, which is called capital loss, which maybe you bought the share at $5 and you sold for whatever reason at $3. You have recorded a loss of negative $2. That's a capital loss. So we have capital gain tax. This one is from the tax side, but we will not talk more about that. But just know that whenever you're hearing capital gain, it's just the profits you make from that's your stock investment. We have what we call dividend. Dividend means when a company, so dividend is so peculiar to the stock market. It's so peculiar to the stock market, and it only starts when a company makes profit. If company doesn't make profit, they can't pay dividend. And it's not a must that companies will pay dividend. So whenever company makes profits, they have two things to do. They might start to retain those earnings. They might start to buy their stock back. They might start to invest more in the business, or they might decide to share some part of that profit with the investors of that company, being the shareholders. So it is called dividend. So when a company makes profit, they use that portion of profit to reward shareholders. That's what dividend is all about. It's different from the gain you make from the supposed capital gain when you sell, or capital appreciation. That's when your share is rising. It doesn't affect, and dividend is being paid by, let's say a company, you hear a company declare dividend of maybe $2 per share for the dividend. If you are holding 1,000 units, that means only from dividend you have made $2 times 1,000. That's $2,000 as dividend. So some people, it's a big concept. We'll still make video on dividend. We have people that they are strictly dividend investors, and it's also one of the ways to generate passive income from the stock market. We'll talk about that in subsequent video. The next concept is ASK, like ASK. So it's a term that refers to the minimum price a seller is willing to sell his security to a buyer. ASK is also known as offer price. So whenever you log into your trading terminal and you see the price of Tesla, First Bank, GT Bank, Nvidia ticking, let's say Nvidia now ticking as $110, that is the asked price. You cannot buy it. That's the minimum. You can buy it at a time. So that is the asked price. While the opposite is the bid. The bid price is the amount a buyer is willing to pay for a share. So it is used to balance the ask price. Very, very important. So it's the opposite. So most of the time, let's not go too deep, but just know that what the buyer is willing to buy is the bid, just like you are bidding for something, and what the seller is willing to sell at a time is the ask price. That's the offer, what they are offering. The second to the last is limit order. So limit order, which is the ninth concept, is a type of stock. There's what we call market order. If you enter the market now and you want to place a trade or buy, you have two things to do there. It's either you say, okay, this stock is currently trading at $100, but I think price, I will not buy at $100. Maybe when price comes at $95, I will buy it. So what you need to do is, there is an option in your brokerage terminal where you place a limit order, and you can go about your business. Whenever price revolves and gets to that level of that limit order, it will be triggered. So limit order is different from the next concept. So let me show you the next concept. So I will use that and explain. The next concept is what we call market order. So market order is also known as instant execution. This is where you open your trading terminal and you place your trade immediately at the current market price. Unlike the limit order, where you are trying to buy below the current market price, it's always geared towards buying below the market current price and shares. But if it's in typical trading, there's strategies that deploy breakouts. People don't want to buy, maybe a particular security is at, or shares or whatever, is at $96, and their strategy is telling them that the only time for them to buy it, let it break out from $100. This time around, your limit order is also above the market price. But instant execution is you are placing your trade immediately. So these are the 10 top stock market terminologies. We have other ones. So if there's another one you remember, comment it down below. See you in the next video. And don't fail to like, comment, and share, and subscribe to the channel. Stay.